Hello traders, it's Victor from TRADEPRO Academy. Long time no see, and we're back again with another video. Now in today's video, what we're going to be going through is a very powerful tool specifically to find where you can see large market reversals. And what we're going to be talking about, as you may have noticed from the title, is absorption. Let's talk absorption, and let's talk about how absorption of the futures markets can help you identify where markets are expected to turn, where traders are super trapped, where there is that kind of reactivity to see a large reversal in the markets. This is a very good way to find market tops, bottoms, major areas, intraday areas, and everything in between. So let's dive right into this. And again, hit that like button, hit that subscribe button if you enjoy what we do, and welcome back to our channel. It's been a long time and we're ready to get back to it. So making more of these theory-based / educational videos for you guys to get a better understanding of how the futures markets trade. So first and foremost, right, I'm going to be showing you guys a bunch of different charts that we can use for absorption, a bunch of different tools that we can identify absorption through when it comes to the futures markets. Absorption is something that you could consider from an order flow aspect as well, because it's the understanding of how big buyers and sellers come together to create trap traders, weak-handed traders. So first and foremost, let's break down what is absorption, and we'll go through the different charts that you might need and use for this specific strategy tool, call it what you will. So absorption is the understanding that there are a lot of market traders coming in at a specific area. Meaning that, for example, into highs, there might be a lot of market buyers that are coming into highs, but prices don't want to continue the momentum move to the upside, right? Instead, you start to see a tool of rejection. So to visualize this a bit better, one of the best tools that we have for absorption is Delta. As you've seen in my other videos, we've been using Delta for quite some time now, and we use it very frequently. I've denoted Delta in terms of blue and red here. So generally what we can see from the blue is like super active net market buying, and then super active net market selling from the red. Now, absorption is the idea that there are clusters of this delta that get created, meaning that when you start to see large clustering of very thick deltas on the S&P 500 on a day-to-day basis, you can consider a very heavy delta in the area of maybe like 1,000 plus. So we'll look at the DOM, we'll look at this delta chart, and then we'll look at a few other key points. So Delta is realistically the best way to find absorption. Delta accumulates with massive market buying, massive market selling, or passive market selling and passive market buying. So the big clusters of Delta that accumulate, they create blocks, for example, on this chart, right? At the bottoms, you can see over here that I'm circling, you can see some very thick negative red Delta. At the highs, very thick positive Delta. So we're looking at these in terms of key extremes at highs and lows. So when I'm looking at this delta, I'm trying to identify where the creation of these thick blocks is, right, at these key extremes. So when that gets created, for example, you're starting to see a lot of market selling hammering into a low. And what they do is they cluster together and create multiple levels of just huge delta, right, negative delta. And this turns into a process where it's not like you see it once someone slaps like 1,000 orders and then they just reject higher, right? It's possible, but the great thing about absorption is that it gets created over time, right? Over multiple tests of an area, over heavy just hammering on the market, very visible on the DOM. And what happens in that situation is that we don't want to get confused, because when you see a lot of selling into a low, for example, that tells us that realistically, there's interest in selling. They might want to go lower. However, the key to absorption is the reaction against the absorption, right? When there's massive clustering of delta, what we're going to see, or what we want to see, is a reaction against said delta. What that means is you want to see maybe into a low. You want to see reactively spiking up, which can be seen on a even candlestick chart, right? So if we take a look at, for example, what happened today, it might not be the biggest area because the delta was very thick throughout the remainder of the day. But as it was happening, right, we can take a look at on the depth of market down here. As it was happening, you're starting to create a lot of selling into the low, And what transpires from that is reactive buying. That's what causes absorption. If we take a look at maybe some other examples over here, right? We can take a look at the key extremes at this low, right? This was about a week ago where there was just heavy selling into the lows, heavy selling into the lows, and just reactive buying. One of the best examples as of yet is the accumulation of all of this market buying into this high, right? You can see that this positive delta shapes up, and it becomes more of a process where prices come in, they buy aggressively, right? They fail. They buy aggressively, they fail. They buy aggressively, they fail. So the reaction is what creates the absorption. Absorption is very prominent on NASDAQ. The S&P, yeah, okay, you have these areas, but the NASDAQ, in essence, you can see it from a very clear standpoint. So you can combine not only the creation of the accumulation of heavy delta, but you can use the tools like the depth of market to see the reactions, the footprint, and even candlestick charts. So let's take a look at NASDAQ and compare it to a candlestick chart from a most recent day of absorption where there was aggressive movement into a high and constant failure against it, telling us that, you know what, this is probably going to mark a fairly large reversal. So for example, here we have TradingView just to give us a visual representation on a 2-minute chart. And here we have the NASDAQ, right? So NASDAQ, you can see, is very prominent when we have extremes where delta trades. So you have all of this clustering of the buy delta into the highs, right? You have all this blue delta. And if you take a look at what's going on here in terms of the actual movement, you can see there's very extended wicks they pull down, extended wicks, telling us that there's multiple failures at that level and fairly large reaction to the sell side. So when we accumulate these things together, right, we have the understanding of the aggression and absorption becoming very apparent on a delta market, right, on a delta move. You can see how well that they're visualized on the NASDAQ. So the NASDAQ here, you can see where the big clusters at the tops get created with all this blue, right? If we take a look at some other examples, realistically, this was about a week prior into Tuesday, May 7th. You can see all of this creation of this very thick stack of positive delta into the highs, right? What does that look like on a TradingView chart, right? Just take a look at the candlesticks because they can give us a better understanding of what is transpiring into those highs, right? From a visual perspective to see, okay, are there rejections there? Are there rejections in that area? Because those rejections, they're typically visible and more prominently visible on like a depth of market. But when we see them on a candlestick chart, we can get a better understanding, a solid understanding of the reality of how they're actually failing, right? So right here, this is one of the best visuals of that time because you get this massive clustering of delta. And then look at what the chart actually represents. This is a 2-minute chart. A lot of these wicks, a lot of these rejections are telling us that, okay, there's actually a failed buying momentum move at that point, right? They're rejecting, and what you're seeing at some point is going to be a larger turning point where they continuously buy, and what we call these are just general weak-handed traders. So when it comes down to absorption, right, the main thing to remember is that, okay, if we're peaking out at an area, right, we're starting to reach an extreme high and extreme low, you want to see the massive clustering of delta. Will this delta get accumulated at an area? What that's telling us is that people are coming in late on the move. They're coming in aggressively, right? They're probably weak-handed traders. And from that, the key point in actually understanding absorption is that are they going to get rejected? Are they actually pulling against them? Is there actually selling aggression coming in? That allows this market to push away from that whole absorption. When that absorption gets accumulated into that area, you need to solidify that they're actually pushing away, because that is what actually creates it. Otherwise, when you're seeing massive buying or massive selling into a low or a high, it's not an issue for prices to continue. You'll see them continue realistically if no one's actually going against them. So it's a very important fact that you need someone rejecting against that area. Otherwise, you're not going to see that larger turning point. So when we have these absorptions, the first test, the first accumulation of those areas on a session-to-session basis, on an individual session basis, is the area that I like to see form, right? If there's multiple of these on a day-to-day basis, what you're seeing in this area is a huge clustering and accumulation of this delta that creates mass absorption at a high or a low that's going to generally turn prices lower. When you get this accumulation of an array of delta that gets absorbed into a high or a low, you're most likely going to see a fairly large turning point in the market. And it works both ways, right? Massive sell delta into lows right here that turns prices up. The massive sell buy delta into highs. That's how I can understand if there's going to be either a continued move or a topping out move. So if I were looking at this market, right, and we come up into this distribution, I say, you know what, like, I think that we're kind of peaking out. Well, let me get the confirmation. Is there multiple days of delta that trades into the high that kind of absorbs prices, right? Is there that absorption to highs with a failure to actually see a continued move? Well, it has to be something very thick that sticks out. You can see here over these days, there's only one day, and the follow through, the delta absorption actually happens into the lows that allows for that sweep even higher. We look at the next day, right? Just in case I have the idea or I'm looking to potentially look for a short move on this. Okay, do I see plethora of absorption? Do I see massive buyers into highs that are getting trapped? Do I see that rejection? No. Okay, so we're probably going to continue higher. Do I see it here on the current day, very close to all-time highs? No, not necessarily. Every absorption that happens on this move higher is at the lows, allowing prices to actually reject and fling back higher. It's a very important factor. So not only am I going to be looking for this large delta accumulation, but I'm going to be looking for the rejection of those areas to really consider that absorption. And absorption is continuous, right? It's very, very prominent when prices continuously buy into highs and press into highs, creating these delta clusters and the rejections. That's when I have the confidence that I'm going to see that move actually turn. I don't want to see it once. I don't want to see a big, massive delta coming in once and then I assume that highs are in, right? You can confirm this with the depth of market. And another tool that you want to seek out is going to be where we sit on a distribution perspective. So when I look for absorption marks massive reversals because generally large reversals in the market are fairly profitable. Those are areas that swing the most. So if I look for the accumulation of absorption, it's generally going to be at a key distribution ledge where a lot of volume does get accumulated. So as I'm looking at this, right, let's say down here into this like 52.32 area. Okay, 52.32 on the S&P 500 over the last few rotations where we got all of this absorption. This was on Friday, actually. So this is this specific day. We can see it's a very thick distribution ledge that holds prices within that distribution. So what that's telling us is prices are in a balanced area that want to actually sustain that after accepting higher. So when we see a lot of absorption into a low or a high of a key distribution area that wants to keep price in balance, that adds validity to our understanding that we want to take a trade there that opposes, right, that and looks for that larger reversal that can swing up in this case or swing down in other cases. So as we look for absorption, right, it's not like, okay, we see massive delta spiking at a high or massive delta spiking at a low. We want to see a very big cluster of that, and we want to see multiple rejections of that price. So if you see very thick positive delta, right, for example, this was on the S&P 500 today. So at this 5300.02 area, we had the accumulation of very, very heavy buying after a news event. Right? So in my eyes, as long as price keeps rejecting that, I can look for a little fade. So you can see there's 1, 2, 3, 4 tests of that area that actually drop about 10 to 15 points, right? So that's a very good opportunity for us to look for that reversal. However, if prices manage to move through and above those areas, that delta gets strengthened, that clustering gets strengthened, and the absorption is no longer valid where you can actually look for another trade opportunity which allows prices to reverse back to the upswing. So you can look at this from two different perspectives, right? The process of it, right, getting created on the clustering of delta and failing to continue that move, which allows us to look for a large reversal, or pinpoint where those areas are and see if prices want to actually traverse above them if there's no concrete reaction against them. Right? It's a very similar situation here on the NASDAQ most recently. So these like big blue bubbles, they're large buys, right? So you can see the delta that gets accumulated over here. Clustering of positive delta, big buyers, they fail. I think, okay, why not? We can look for some kind of short opportunity because there's an anticipation that there's going to be a reversal from this area. And then at a certain point, we actually break through it. And once that break happens, you're most likely to get a very strong continuation to the upside. So absorption works in multiple different ways, right? Absorption allows us to find where key areas to the long side are, right? Or the key areas for a rejection and key areas of where said prices can continue. Very similar to what had happened here on yesterday's session. Again, absorption accumulates over here, massive buying into a high, right? You can see like passive selling into that area, big delta accumulation, large failure, 370. So if prices happen to run above that, the absorption gets quenched and you're going to get that expansive move even higher. So to review this, right, absorption is a great tool to identify where prices are expected to hold a significant reversal, right? So when you see absorption, we denote it from delta. Delta helps us visualize it because you want to see where the clusters of big blue delta or big red delta actually accumulate, and the rejection. That's a key factor. It's only absorption if there's going to be rejection from those areas. Meaning that if we cluster a lot of blue into a high, all that delta getting stacked up, we want to see selling react and trying to push against it. Otherwise, you're most likely going to see a move through. And you can quantify that using the depth of market and the footprint, right, to help you understand if there's active selling, active buying to help your case in the idea of absorption. So with that being said, this is a great tool to add to your arsenal in trading, right? And we've got a lot more of that if you go and check out community.tradeproacademy.com. There's a lot of videos in there that you guys can check out, and we'll see you guys next time. So that was the topic of absorption. Next time around, we'll talk about something else, right? We might talk about the footprint or the depth of market. Drop a comment down below and let us know what you're hungry to see, right? So I'll see you guys next time. We'll chat soon. Take care.